Hemang Jani, good morning. What are you telling your clients? How should they approach the month of Jan?
Good morning, Nikunj. The start appears to be pretty decent. Having seen a very strong rally last year, I think the structure of the market continues to be good, whether it's the crude oil, the interest rates environment, and most importantly, Nikunj, the earnings that we are going to see, starting from today. How it pans out is something that remains to be seen. But our overall sense is that though we might see a little bit of sideways movement or a bit of a profit booking, the broad structure of the market continues to remain good. We'll have to do a little bit more hard work in terms of what are the pockets of opportunities, both in large caps and mid caps. But a lot of expectation, a lot of opportunities.
Can you be specific?
So, Nikunj, when we look at this year, there are four broad categories where the earnings growth is going to be very strong. First is capital goods, about 30% kind of a growth. No doubt the valuations are on the higher side. Banks is one pocket where you will see a 30% growth with the comfort on the valuations, and the sector also has underperformed. Healthcare would be third pocket where we see a very strong earnings growth of 35%. And lastly, telecom. I think this is a sector which not many people are talking about. But in terms of earnings for 24-25, it would be one of the best performing sector. So these are the four pockets where we would have a positive bias in terms of earnings.
Wanted to get in your take on the kind of Q3 updates we're getting, in particular from the likes of a Bajaj Finance, where they have seen their overall deposit growth up 35% on year. IndusInd Bank, which has been fairly encouraging with a deposit growth of nearly 42%. What is this indicative of?
I think Bajaj Finance has gone through its own sort of negative developments, both from regulator and with the episode with the RBL Bank in terms of credit card. So now that the business update is out, I think it looks pretty decent. What remains to be seen is what kind of growth one can really expect this year from Bajaj Finance, given the fact that it's trading at a very high valuation. So I like the stock, I like the legacy, but the valuation being on a higher side, I would be comfortable entering into it at a correction.
Kunal, let's divide the market into two parts. How much we rallied because of global cues, which is Fed, and how much we rallied because of a local factor, which is election result. One factor is reversing, the US interest rate and the bond yields they are spiking. So how much weightage would you give to global in the month of December for the rally, or how much was local?
Well, very, very tough one, Nikunj, but I think it's a very good question as such, because the markets, of course, so what we started off from 26th October was 20th of October, I think was the time when the index had formed a low. What started off was a process of a global rally, which started off for many of the emerging markets as well as the global markets, which managed to bounce back. Dow made a new high, Nasdaq made a new high for itself, or I think I was on the verge of making a new high for itself. S&P's managed to do it. So I think it was a good global rally which shaped up. Dollar index fell from, I think, 106 levels to 101 odd mark for itself. So there was a global construct. But even in the last couple of days, it's not as if that the global rally has gone into it's gone into a correction, but it's not gone to a bear market signal as such, because dollar index has just gone through a bounce from 100 to 102. Now the breakout as such would be closer to 106 for dollar index. So yes, the global markets are falling or maybe correcting in line with our markets. Maybe some part of it is completely correlated or linked to the global markets from our market point of view. But I would still not be very much concerned, because the signals over there, I was looking at most of the charts, crude oil is still hovering at the lower end of the ranges for itself. So I think most of the charts are still signaling that we could probably be getting into a tepid kind of a range for most of the indices. But as of now, no major signal across the globe, across the indices, that trends are reversing for many global markets.
Nasdaq has fallen and Indian IT stocks have fallen. The companies are different, but the pattern is always the same. Would you avoid IT given that Nasdaq is not off to a great start?
I think more than Nasdaq, Nitin, as you rightly said, that the structure of the index and the composition of that index is very different from what we have here. But the fact of the matter is that this quarterly results are not going to be anything great in terms of surprises for the IT companies. And while we are not talking so much about IT as a space, the fact of the matter is that last whole year, the sector has done pretty well, about 23-24% kind of a uptick from January. So I would be comfortable entering into these stocks once we have slightly more color in terms of earnings for next year. While people do hope that the growth is going to be 10-12% for large caps, maybe mid caps about 16-20%. We really want to see what managements are saying at this point of time. And we would avoid at least till there is a clarity on the earnings.
Uh, Rudamurthy, one sector which has done rather well for itself is oil marketing, OMCs, in the month of December. Is there some more headroom left for HPCL, BPCL, IFC?
Definitely, Nikunj. For me, Hind Petro looks very, very strong. This stock has first given a breakout at around 310, made the up move till levels closer to 380, then again consolidated, again took support at that 360 zone, and now it is making the next big move. So for me, this is a stock you have to buy on every dip. And for me, crude medium to longer time frame is still negative. Keep aside yesterday's up move of whatever 2-3% what you have seen. Use these opportunities to buy into OMCs. So for me, Hind Petro is the top pick among the OMCs, and even IOC, Indian Oil Corporation, looks very, very strong. And see the amount of consolidation these stocks took before, and now they are making a move after that big consolidation. And for me, the steam is still not out. It is still there, and further up move can be seen in stocks like IOC. I won't be surprised to see a move of around 50-60% kind of a move in this sector in general, and stock specific Hind Petro and IOC for a year's time from now can give a move even closer to that 60 to 100% kind of a bracket. I'm very, very bullish on this sector, and my top two picks here will be Hind Petro and IOC.
Hemang, wanted to get in your take on the capex related theme. Given that it is a critical election related here, do you think that macros will continue to remain favorable, and therefore one can look at the entire manufacturing and capex related theme favorably? Where are you sensing opportunity here?
So, Aman, while we do feel that this year again, the growth in terms of earning at an aggregate level be around 30%, what we should understand is that the sector has really done extremely well in the last 1.5 years, and the stocks have really gone up quite a bit. We have seen it across. So I would be comfortable buying into the stories where there is a slightly more degree of comfort. So maybe something like L&T, Thermex, some of the defense companies, Bharat Electronics, BML. I think these are the pockets where we have a slightly higher degree of conviction when it comes to earnings. So we'll stick to those.
Stay with us, and with the new year setting in, we caught up with some of the top market honchos, the likes of Ravi Dharamshi, Hiren Ved, Sridhar Sivaram, and many others. Let's hear out some important excerpts from their conversations.
Couple of the leader banks not giving any kind of a return creates the perfect base for to start thinking of placing bets in terms of from 3 to 5 years perspective. So I am again, without naming anyone, the cycle in financials remains in favor. Large lending, the private banks remains favorable. The capex cycle is just beginning, the private capex cycle. The corporate lending growth will pick up going forward.
I think the second area which we've been talking about is, as I said, if you can put it all in the bucket of manufacturing or cap goods, infra. I mean, that whole pack, power, real estate, renewable energy. I think you find companies, quality companies there, and I think you could compound at 20, 25, 30% a year for the next couple of years, right?
EMS as a space, whether it is +1 or not, is going to boom anyway, because the electronic component in our daily lives is significantly going up. Now, having said that, these stocks have rallied a lot. So it is not as if they have not rallied. Their earnings will also grow. may not be structural, may not be like every quarter it grows. So you will see surprises here. Those are the opportunities to buy.
Hemang, what would you do with EMS stocks? I mean, they were the toast of the town for 2023, whether it was Dixon or whether it was Shirma or for that matter, even Keynes. Would you continue to ride them?
I think, for incremental money, I would not be comfortable allocating to this theme because a large part of that positive is pricing. Dixon, we've had some positive, news flow around production that they can possibly get from the mobile phone and high margin categories. So if you see some 10% kind of a cut on Dixon, surely it is something that we would be comfortable looking at. But by and large, now that that theme is so very well discovered and the prices are not so cheap, Dixon is quoting at some 50-55 times. So not too comfortable, putting incremental money at these levels.
Fair enough. Meantime, let's also get in a take then on the outlook on the IT space as a whole then. And given that most of the brokerages have been looking at rating changes, upgrading the IT stocks, and the year gone by has been fairly tempered, Hemang, what does 2024 hold in store for IT top bets?
As I said, this quarterly earnings season will not have any material positive surprises. And let's say in case of the large cap names, the growth could be in the range of about minus 0.5% to about 1.2% on a quarter-on-quarter basis on constant currency. Mid-caps, we will have to be slightly more, stock specific as to what companies deliver because, you have persistent system and KPIT and those names which can possibly surprise also on the earnings front. But I would be more comfortable playing this theme post results based on what kind of surprises do we get in the numbers.
Sure. Meantime, let's also get in some chart checks going then. Just about a couple of minutes to go for those pre-open rates. And yesterday, some of those metal stocks buckling under pressure. Rudra, what do the charts indicate?
See, yes, after making that big move in metal stocks, most of them had a very, very good move. They're now just consolidating. So for me, metals will definitely do good. You have to be stock specific. So if I see even counters like Tata Steel, and even if you pick up Hindalco, Nalco, these are all stocks which have done very, very good. So having seen that very big move, now they are just consolidating and it's an opportunity for someone to just enter into these counters on dips. So for me, pharma looks very strong, metals look very strong, and even IT looks very strong. Might be I'm sounding a bit defensive, but these are places where still value is available, and use these dips in metals to buy into your portfolio. And I won't be surprised to see these three sectors being the top performers in 2024. And specifically from banks also, SBI even at current levels offer good valuation comfort as well as chart comfort to me. So for me, stocks like SBI and even from metal pack, the names whatever I've told, and in pharma, look at Sun Pharma, look at even Lupin, look at Oro Pharma, look at Glenmark. All these offers great value. So for me, large cap will move like mid and small cap in 2024, and you have to be in this sector and these stocks which I've mentioned.
Right, okay. Hemang, we'll let you go on that note. Thanks as always for joining in. Let's just mark those pre-open rates as well. It seems like it's going to be a bit of a tempered start, much in line with the rest of the globe. Of course, a lot of stocks as well which are going to be in focus. Bajaj Finance after its quarterly updates. There's L&T wherein there is a Nomura upgrade coming in. They've upped the target price to now 4,000 from the earlier 2,770, which of course the stock already crossed past. And then an upgrade coming in on Tata Motors as well, upping the price target all the way to 925. That stock also will just come up for you on your screens, almost 2% higher for that particular stock. And Torrent Power, wherein they've signed an MOU with the government of Gujarat for a price consideration of 47,350 odd crore rupees. That's Torrent Power in trade. But let's get in some mid-cap ideas as well on that note then. Kunal, what's on your list?
So yesterday, Manappuram Finance was one of the stocks which was on the verge of a breakout of a consolidation above 170 to 73 mark. So expecting the stock to get into that breakout mode and end the consolidation, which has been lasting for a few days. Buy with a target of 185. Stop loss could be kept at 169.
Okay, and Rudra, what about your stock strategies from Midcaps?
See, for me, Glenmark Life Science is a stock which is looking very, very strong. Look at last 2 days volume and the price action, which is clearly indicating to me that after a long consolidation, this stock has given a breakout clearly above 675. So for me, Glenmark Life Science looks very, very attractive. Look at initial targets of on Glenmark to come at around 800, and for me this is a stock which will move towards that 4-digit figure of 1000, keeping a tight stop loss of around 700 on closing basis. I will be a buyer in Glenmark Life Science for a target of 800 to come initially and then to 1000.
Okay, let's take a very quick break. By then, we'll have the pre-open rates settle down as well. It's actually a green tick coming in and marginally higher as we speak right now. We'll analyze how the markets are set to open after this short break.